Hi, and welcome back to our new technical analysis edition. My name is Violeta Todorova, and I'm Senior Research Analyst at Leverage Shares. Wall Street was bleeding on Tuesday after US inflation data turned out stronger than expected in August. The monthly CPI index rose 0.1%, bringing the annual rate to 0.3%. In particular, the core CPI rose a thumping 0.6% month-on-month, twice what was expected, driving the annual core inflation rate up to 6.3% from 5.9% in July. That's the highest it's been since 4 years high that it hit in March, which could trigger the biggest Fed rate hike in 40 years. Any doubt the Fed will raise rates by 75 basis points next week is gone, and the chance of a full 1% rate increase is now also being considered. The CPI print also opens the door for larger rate hikes in November and potentially December. After a strong week leading into the print, US equities traded deeply in the red, and high valuation names felt the brunt of soaring US Treasury yields. All major US indices are on the verge of breaking below their respective short-term uptrend lines, which could be the trigger for a retest of their June lows. The short-term momentum indicators have turned down, and we see a high probability of the S&P 500 index dropping to 3,600 points, the Dow Jones Industrial Average dropping to 29,600 points, and the Nasdaq 100 index declining to 11,000 points. Thank you very much for tuning in. See you next time.